Picture a multi-billion-dollar supercomputer. It has all the processing power in the world, but there's a catch. It has absolutely no internet connection. It can crunch the most complicated math problems perfectly, but ask for today's temperature or who won the game last night, and it has no idea. It's completely cut off from us. Blockchains operate a lot like that isolated machine. They are incredibly secure and great at moving digital value, but are totally blind to outside realities. A blockchain on its own has no way of knowing who won this Chiefs game or if a hurricane just hit the coast. For these networks to actually be useful in our daily lives, like paying out a sports bet or triggering crop insurance, they need a highly secure way to pull in that outside information and verify it's true. This is the exact problem APRO is solving. Think of it as a smart bridge. It acts as a digital courier, technically called an oracle, that securely carries real-world data into these isolated networks. By using artificial intelligence, APRO takes live information, like current stock prices or financial metrics, and pipes it into 40 different blockchains at the exact same time. And the scale of this operation is immense. Applications are asking APRO to fetch real-world data over 100,000 times every single week. That high level of utility caught the attention of some very deep pockets. Traditional finance and heavy-hitting crypto investors recently put $3 million into the project to help it grow. We're talking about major players here. The backing comes directly from Polychain Capital, Binance Labs, and the multi-trillion-dollar investment giant Franklin Templeton. When you combine that massive traffic with elite institutional money, it's clear that APRO isn't just a theory. It is functioning, vital infrastructure that's already in use. To understand how all this technology translates into an investment, we have to look at the supply and demand rules of the project's native digital token, which you'll see listed under the symbol AT. Right now, the total market value of all the AT tokens currently available to the public sits at approximately $40 million. This diagram shows the project's strict production limit. The code is hardwired so that no more than 1 billion AT tokens will ever be created. But right now, only 23% of those are actually available for people to buy. That leaves a massive 77% of the supply still locked away, eventually scheduled to be released onto the open market. This is a major risk to be aware of. When a massive supply of new tokens suddenly floods the market, it creates heavy downward pressure that can easily crush the price, even if the technology is working perfectly. And if we look at the market reality today, the AT token is trading for roughly 17 cents. That is a sharp contrast to its debut. Back in October 2025, when it first appeared on major exchanges, the token reached an all-time high of 86 cents. Performance shows a brutal 80% drop from that opening peak, down to today's levels. Investor mood is highly pessimistic. For a real recovery, the price must break through a psychological ceiling at the 30-cent mark, where selling pressure is strongest. The price reflects a market caught between the project's high utility and the looming fear of all those locked tokens eventually flooding the supply. So let's look at the full board and weigh the strengths against the weaknesses. On the positive side, APRO has backing from elite investment firms and boasts massive, verifiable usage across dozens of networks every single week. But on the negative side, the founding team remains completely anonymous, and there is a massive overhang of 77% of the tokens still waiting to hit the market. So ultimately, APRO is solving a real problem with live infrastructure, but it is very much a high-risk play and far from a guaranteed financial win. If you're looking to track the AT token yourself, you'll find it trading right now on Binance, Gate.io, or PancakeSwap. What do you think? Is APRO building the next essential bridge for the digital economy? Or is it just another passing hype cycle? Let me know your call in the comments. As always, hit like and subscribe for more breakdowns every week. Remember, this is not financial